Only with Verizon Mobile for Microsoft Teams, your existing Verizon number is now the one number you need for effortless mobile collaboration across all your devices. Your number integrates all your mobile calls with Microsoft Teams. Your number lets you easily turn a call into a video collaboration. Your number moves your calls seamlessly across devices. Only on the network businesses rely on. See the difference Verizon Mobile for Microsoft Teams can make for your team. It's your business. It's your Verizon.
Are you looking for a podcast that's entertaining, more bingeable than your favorite Netflix show, and informative? The Personal Finance Podcast teaches you the hacks, tips, and tactics you need to upgrade your money, all while spending less and saving more. This isn't a show that teaches you to save money by clipping coupons. It's much more about learning how to build generational wealth and spending your money on the things you love. Search for the Personal Finance Podcast on Apple Podcasts, Spotify, or wherever you listen to podcasts. Your wallet will thank you later. This is Optimal Finance Daily, episode 2313, The 7 Streams of Income to Get Rich, Part 2, by Nick Maggiulli of dollarsandData.com. And I'm your host and personal finance enthusiast, Diana Merriam. Today's post is actually a continuation from yesterday. So if you're new here, it'd be best to listen to yesterday's episode first. But if you're all caught up, let's hear part 2 and continue optimizing your life. The 7 Streams of Income to Get Rich, Part 2, by Nick Maggiulli of dollarsandData.com. Number 4, dividend income. Dividend income is a form of passive income that's earned by owning stocks that pay dividends, which are a portion of the company's profits that are distributed to shareholders. Dividend income is often considered a more stable form of income compared to capital gains, as it's not tied to the fluctuations of the stock market and can provide a consistent stream of revenue over time. For example, during the Great Depression, U.S. stock prices declined by 90%. Yet dividend income only dropped by 50%. This illustrates how dividend income can act as a partial buffer against large declines in asset prices. This does not mean that dividend income is guaranteed, as companies can reduce or eliminate their dividends at any time. However, it's far stickier than many realize. More importantly, compared to other forms of income, dividend income is more likely to keep pace with inflation, as companies raise their dividends to offset higher prices. Once again, this isn't guaranteed, but it isn't unusual either. To maximize your dividend income, you can invest in high-quality dividend-paying stocks that have a history of consistent dividend payouts and a track record of stable earnings. You can also consider investing in dividend-focused mutual funds or exchange-traded funds, ETFs, to gain exposure to a diversified portfolio of dividend-paying stocks. The one downside of owning dividend stocks is that they have underperformed the market in recent years. The Vanguard High Dividend Yield ETF has underperformed the S&P 500 by about 44% over the last 10 years on a total return basis. This is a big reason why I'm generally not a fan of dividend investing. Owning them has come at a cost in recent years. Despite their underperformance, I still understand their appeal. The income stream associated with dividend stocks is likely to be far more stable during market downturns than the price of an overall stock portfolio. Therefore, if you're someone who likes the idea of a more stable income stream, then dividend investing might provide the psychological comfort that an overall market portfolio simply can't. Either way, dividend income can be useful for those who want another passive stream of income. Dividend income summary. Pros: passive, relatively stable. Cons: requires capital, may not generate as much income long-term as stocks generally. Number 5, rental income. Rental income is a form of passive income that's earned by owning and renting out a property, such as a house, apartment, or commercial space. This form of income can provide a steady and reliable source of revenue, as rental income is typically earned on a monthly basis and can be used to pay off the mortgage or other expenses associated with the property. One of the benefits of rental income is that it can provide a hedge against inflation, as rental income can increase over time with the rising cost of living. Additionally, rental income can provide a tax benefit, as rental expenses such as mortgage interest, property taxes, and maintenance costs can be deducted from your rental income. To maximize your rental income, you can invest in a property that has the potential for high rental demand, such as a property in a desirable location or with unique amenities. You can also consider hiring a property manager to handle the day-to-day operations of the property and ensure that the rental income is maximized. However, it's important to recognize that rental income is not without risk and hassle. You may experience periods of vacancy or have difficulty finding reliable tenants, which can reduce your overall earnings. Additionally, owning a rental property requires a level of time, effort, and investment and may not be suitable for everyone. For these reasons, I have generally avoided rental properties as I find the return on hassle isn't worth the additional income. Notice that this is a personal bias of mine, and I know many investors that are quite pleased with their experience in rental properties. In full, rental income can be useful for those who have the time, resources, and interest in owning and managing rental properties and tenant relationships. Rental income summary. Pros: can be somewhat passive, better tax treatment. Cons: requires capital and some expertise, mental hassle, dealing with tenants isn't always easy. Number 6, business income. Business income is a form of earned income that's generated by owning and operating a business. This form of income can provide unlimited potential for revenue and can be a powerful tool for building wealth over time. One of the benefits of business income is that it can provide flexibility and independence, as you're able to control your own schedule and make decisions that can directly impact your earnings. Additionally, owning a business can provide tax benefits, as certain expenses can be deducted from your income and reduce your overall tax liability. To maximize your business income, you can invest in a business that has a strong potential for growth and profitability. In particular, I've found that online businesses are great for getting started because costs are generally lower and margins can be quite high. You can also consider leveraging technology and social media to reach more customers and generate more revenue. However, it's important to recognize that owning a business can also come with risk, such as market fluctuations, competition, and operational costs. Additionally, running a business requires a certain level of time, effort, and investment that may not be suitable for you. Overall, business income can be a useful stream of income for individuals who have a passion for entrepreneurship and the drive to succeed. Business income summary. Pros: better tax treatment, scales well, especially if the business is online. Cons: requires a lot of work, capital, or both, can take many years before you see results. And number 7, royalty income. Royalty income is a form of passive income that's earned by owning and licensing intellectual property, such as patents, copyrights, or trademarks. This form of income can provide a steady and reliable source of revenue, as royalty income is typically earned on a regular basis, based on the usage or sales of the intellectual property. One of the benefits of royalty income is that it can provide a consistent source of income without the need for ongoing maintenance or investment. Additionally, owning intellectual property can provide a level of protection and security, as it can prevent others from using or profiting from your creative works. To maximize your royalty income, you can invest in intellectual property that has a potential for high demand and widespread usage, such as a popular song or book. You can also consider partnering with a licensing agency or publisher to help the licensing and distribution of your intellectual property as well. However, it's important to recognize that royalty income is not without risk, as the demand and popularity of intellectual property can fluctuate over time. Additionally, the process of acquiring and maintaining intellectual property can be time-consuming and require a level of investment that may not always pan out. Royalty income summary. Pros: passive, scales very well. Cons: requires a product with demand, no guarantee of return on your time, effort, or investment. Do you need all 7 streams of income? While having multiple streams of income can be a great way to build wealth and achieve financial freedom, it's important to recognize that you don't need to have all 7 streams of income to build wealth. For example, I only have 6 of the 7 streams of income mentioned today. Sorry, rental properties. And that's fine by me. More importantly, having one big income stream can be more impactful than many small income streams. For example, earning a high salary or running a successful business can provide a significant source of income that can be used to invest in other income-producing assets in the future. And for many people, this is the norm. By focusing on building a strong foundation, you can then leverage this income to build other income streams when the time is right. Regardless of what you decide to do, finding the right income streams for your lifestyle and personality is far more important than having more of them. You just listened to part 2 of the post titled The 7 Streams of Income to Get Rich by Nick Maggiulli of $dollarsandData.com.
Smoothie King asks, what's that sound? That's the sound of hearts popping out of your eyes when you see Smoothie King's all-new smoothie bowls. These Power Pack beauties are just waiting to be spooned. Our smoothie bowls start with acai or pitaya and are handcrafted with fresh toppings like sliced bananas, sweet berries, ripe mangoes, crunchy Purely Elizabeth granola, and a savory peanut butter drizzle. That's the sound of a smoothie bowl being made fresh, just for you. The new Smoothie Bowls menu, only at Smoothie King.
Before Avid Exchange, managing accounts payable took too much time and effort. Coding and reviewing invoices, tracking down approvals, the list goes on. But with Avid Exchange, your AP is automated, so you can review and approve invoices anytime, anywhere. You'll gain greater visibility and control into your workflow, giving you time to focus on more important things. Experience the power of change. Avid Exchange. Learn more at avidexchange.com. That's avidexchange.com.
Like Nick, I don't have all of these streams of income. I have even less than 6. Currently, I invest passively in the stock market, actively in my own business, and then I receive 1099 income from hosting this podcast. I do see rentals being an additional source of income for me eventually, but I'm very conscious of not stretching myself too thin. Rome wasn't built in a day, and neither are all these sources of income. While I'm interested in investing in real estate, I don't feel comfortable in doing so until the business I started, the Economy Conference, is more financially stable. Entrepreneurship is already at the edge of my comfort level in terms of risk tolerance, so I'm not about to compound that with real estate investing right now. I think it's important to keep an eye on the big picture. While diversifying your income streams is essential for building long-term wealth, as I stated yesterday, income is a piece of the puzzle. I used to think that income was the most important piece, but now I consider my overall financial goals and risk tolerance. Depending on your financial situation, it may be more important to focus on reducing debt or building an emergency fund than on generating passive income. It's important to create a comprehensive financial plan that takes into account your short and long-term goals. And that's another episode of Optimal Finance Daily in the books. I'll be back with more for you tomorrow. So have a great rest of your day, and I'll catch you on the Sunday show where your optimal life awaits.